Today's a topic that I have not really seen or heard or mentioned lately, but it's about payday loans. I was driving in my car the other day and I heard this commercial about a payday loan. And in our area, the one I was hearing on the radio is Dollar Loan Center, right? So they talk about all the time how you get access to quick money and quick cash. And the whole point of this whole channel, especially talking to you young fellas, is trying to figure out how to get your financial house in order and try to figure out how to win at this game of money and finance so that someday you can get financially free. And of all the things, even worse than credit cards are these payday loans. And so what I want to talk about is how a $1,000 payday loan in 12 months' time can literally turn into having $2,000 worth of payments in interest, besides all the costs and the fees and the other BS that they charge you. And it's funny because the commercial makes it sound like, oh, this is an amazing thing, easy access to cash, and it's ridiculous. So here is the question I want to ask you is this. If I loaned you $1,000, right? And I said to you, it would only cost you $5.50 a day to borrow it from me. Okay. So I loan you the $1,000, and for every day you have it from me, $5.50 keeps adding up, adding up, adding up. So if you took some time and paid me back, do you think that this would be a good deal? Okay. Thinking $5.50 a day, that's not too bad. And the commercial, like I said, it drove me crazy. This so-called small fee really works out to literally 200% interest per year, 200%. And this is why if you go into the payday loan game, this is even worse than credit cards or almost any other thing I can think of in order for you to go broke. Now, you could be a gambler, a drug addict. You could spend money like, who knows? I'm sure there's worse ways to spend your money, but borrowing from a payday lender is so much worse. I would literally tell you to charge on a credit card before I would tell you to charge on a payday loan. And here's why, okay? What I want to explain to you is that payday loans are typically supposedly short-term, small dollar, and they're marketed as fast cash. I'll get you some fast cash right now. And typically the person who is the average buyer or average, person getting these loans are working adults with no emergency money saved up, no emergency savings, no savings buffer, no cash available to them. And many people are unable to even get a credit card. That's why they're using payday lenders. And so I want to show you the math on this, because as much as I hate 20 and 25 and 30% interest rates on a credit card, it's actually going to be better than doing a payday loan. So here's what I want to show you, okay? If the daily cost is $5.50, and I'm breaking out my trusty dusty quote meter here, right? And I want you to look at this, right? But if you borrow at $5.50 per day for $1,000, I want you to look at that. 14 days would be $77 in fees. In 30 days, it's $165. In 90 days, it's $495 in fees. And if you work that out to a complete year, it's $2,007.50 in fees, or 201% APR, which is absolutely freaking crazy that your interest would have been double. You would have paid $2,000 to borrow $1,000 for 12 months. Now, look, I just want you to look at that. That to me is crazy. And I don't know about you, but you would never sign up for a credit card or any other loan or anything that would be 2,000%, right? That's just crazy. And these commercials, they make it sound like it's a no big brainer thing and you should do this. And honestly, it's got to be one of the worst things I've ever heard of. And so the reason why it is worse is this, is that one, most people, if you're borrowing that, let's say, as a payday lender, right? So the idea would be you're going to get paid in a week or two and you'll be able to pay them back. And the thing about it is that typically what people do is they roll them over, typically like what you would do on a credit card. And then that's how that starts to build up. And at 2,000% interest, there's no ways to do that. So again, you end up with new fees every time you roll it over, new credits. And again, I was looking at this and it says, if you renew, suddenly you might have paid $300 or $400 in a few months, but not only that, there are other fees. So I made a list. I wanted to read some of these to you guys. So typical payday loan fees, there's the origination on that loan fee. So the base, that $5.50 a day, often structured as a $15 or $30 per $100 borrowed. there's a rollover and renewal fee. So if you borrow this at $5.50 a day and you roll it over every 2 weeks, there's going to be some rollover fees. I don't know. Every company's fees are going to be different. You have late payment fees. So if you're not able to pay that off in full, now you're going to have late payments on top of that. And often it's a fixed dollar amount. So it wouldn't be an interest rate anymore. It would be a fixed dollar on top of the interest that you're paying. And then, of course, if you write them a check or you go to pay them off and your check bounces for some reason, you're going to have NSF fees, non-payment return fees, collection fees if they eventually have to send you to collections to get your money on there. And then there's additional add-ons where some lenders bundle things like credit protection or fast funding and other options. And really what you're doing here is you're preying on people that have no financial literacy. And the whole point of this channel is to help you create some financial literacy. So if you happen to be someone who did a payday loan because your situation you had to, I understand, I feel your pain, but this has got to be one of the lowest ways on the way to make a living. I know when I was in college, I was a bank teller. So I learned a lot about these companies because they used to come in and make deposits into our bank. And I remember because I was getting my degree in finance and economics, which I now have, and they literally wanted me to come work with them and potentially be someone who opened up stores and did this with them. And it was just like, there's no way. I'm sure I could have made a fortune doing it, but there's no way I could consciously make a living preying on people that have no financial literacy and making really poor financial decisions. And that is the whole point of this channel, why we're doing this. So again, think of this as really an extreme example of a credit card. Credit cards that are doing this at 15 and 20 and 30%, not as bad compared to payday loans, but same kind of thing. They're preying on people that don't understand financial literacy. And so, the $5.50 a day is just a start. Let's give you an example, right? A story. I always think that you guys learn these things better when you're doing stories. And so let's use Jake, who went and borrowed $1,000 at a payday lender, right? And this is the trap. So Jake's car, let's just say Jake's car broke down, right? So he needed to borrow the $1,000 for repairs because he didn't have an emergency fund. He didn't have that extra money saved up. And he needed to have his car fixed because otherwise he couldn't get to work to keep his job. So he borrows the $1,000. He doesn't have savings. So he walks into the payday lender and they do this $5.50 a day. So Jake agrees to it. And again, in those first 14 days, if you're able to pay it back relatively quickly, get them the $1,000 plus the $77, right? 14 days, pay them back the $77. Not the worst thing you ever did. But let's say doesn't work out. Something else happens. And now it took him 30 days, right? So now that 30 days, you're up to $195, right? $165. I almost missed it. And now you have the $165, but you have a rollover fee, some other fee. You could see how this just starts to snowball and becomes a thing. And I've got the list here of continuing on into 3 months or 6 months. And you could see how eventually this potentially could lead you to being in a situation where you have to file for full-blown bankruptcy, which you would never want to do. So who gets hurt the most with this doing payday lenders, right? Typically, it's people living paycheck to paycheck that aren't able to get their financial house in order. A lot of times it's young workers who have unstable incomes, and so you need to be able to get a little cash to be able to cover your expenses. It's for people that don't have credit options. So maybe you have no credit score, so you're unable to attain a credit card or something that, at least in the short term, wouldn't be great, but at least at 10 or 15 or 20%, or maybe something you found a card that had no interest for 3 months or 6 months. These gives you a fighting chance to try to recover versus this crazy thing. And so what are some potential smarter alternatives that might work better for you than a payday loan? So I want to talk about this real quick. So if you're able to build up an emergency fund of $500, $1,000 and borrow from yourself, that's obviously going to be a lot better than having an emergency fund. The second one is a lot of times at credit unions or small local banks, you're able to get a small dollar actual personal loan, and it might only be a 10 or 15% interest rate versus the $2,000 on a payday lender. Okay. Maybe you can ask your employer for a small advance because you had some emergency that came up. Sometimes you can do that. Other things you can do are side hustles. So for example, being in real estate, I run across little side jobs all the time, whether it's cleaning out a house, whether it's moving furniture, whether it's throwing, bringing my son as a dump trailer, bringing that dump trailer over to his house. I know in the last 7 days, he had a $250 job. He had an $850 job. He also just did another job where he made $400. And again, one was just throwing things away. One was just moving things out for a house. And one person, he actually built a couple of fences for somebody. So he's got a good toolkit to be able to have some side hustle money. And he does this because this is how he's able to pay for his fun and his toys and his extras, that way he doesn't feel guilty when he spends money on things that maybe aren't the smartest, but this is kind of his side hustle gig. You can also try to cut some of these unnecessary expenses to get that budget down to then be able to build up the reserve. And the goal of this whole video, again, I don't want you to feel shame or embarrassed that you didn't know about this, right? You didn't know that this is what was happening to you. I can't tell how many times I sit down with people and they get the lesser version of this on a credit card or some other loan that they didn't understand how it worked. And so I'm not trying to make you feel shitty about this. I'm trying to help you understand how important it is to understand financial literacy. Because here's the thing. If we talk about the interest rates and the money you can earn on the stock market, and we talk about index funds, over 50 years, you've earned 10%. Well, it's pretty hard to earn safely more than that. Yes, some years you can earn more than 10% and it happens, but credit cards, payday loans, most of the time when you're borrowing money, those rates are well above 10%, and you're not going to be able to do both at the same time. You're going to lose if you're paying 15 and 20 and 30 and on a payday loan, 2,000% interest. You're just not going to be able to win. So here's what I want you to do. Here's what I need you to understand is this, okay? Go back to that $1,000 payday loan at $5.50 a day. How does that sound to you now that I explained how that works, right? Borrowing $1,000 a day for $5.50 doesn't sound terrible, but it actually is. In reality, there's no way to get ahead financially if you're doing those kind of things. So if you're looking to understand and upgrade your financial literacy game, start following the channel. There's a bunch of videos you can go back and watch that talk about the basics. And if you want to go to the very, very basics, just go to my website. There's a sheet of paper that tells you here's the 11 things that you should do in order to win and get going at the game of money and finance. And for most people, if you only did those 11 things, long-term, you will win. But it's thinking about how can I better educate myself on this, because you never, ever, ever want this to happen to you again. Don't fall for it. Don't listen to their BS. Don't listen to their commercials. Don't ever let them get you thinking that this was just one of those, hey, this is going to be an easy thing to do, because again, that what sounds like a small dollar amount will crush you. So appreciate you watching. Hopefully you can keep following, subscribe to the channel, and you can start upgrading your financial literacy game.